Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Dixon Technology. Why it is a buy over a 2-year period. Let's understand about it. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Dixon Tech, here's a small request. Can you support me on Patreon? Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, once you pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company. It was established in 1993 and it is a leading electronic contract manufacturing firm, and they also manufacture consumer durable products. It boasts of best clients in the business, and it has a market cap of around 22,000 crore, which has declined from the top. Their clientele includes CB Plus, Xiaomi, Samsung, and all washing machines plus Jio set-top boxes, which they have started with in FY22. If you look at the numbers, these are Q1 FY23 numbers, June quarter numbers. So it was pretty good. Sales went up by 54%, and there was a tremendous increase in PAT of around 256. It's not 25.6%, but 256% increase in PAT. ROE of 22%. Margins have expanded to 4% from 3%, which is quite surprising, but is pretty good. But they need to increase margin further going forward for the stock to move even higher. If you look at the performance of the stock, then stock is up 5x between 2020 March till 21 October or so. So in about 18 months, it was up 5x, and then numbers remained strong, but the stock moved up a lot, and the valuations were very stretched at around 130, 140 times earnings. So the stock declined from the top. 6300, 6400 was the high, and now the stock is trading at 3800 or so. So it has been consistently gaining market share and new customers, but since the valuations were exorbitantly high, so the stock corrected from the top, plus 1 or 2 quarters did not match analyst expectations. But margins have improved in this quarter, which is a big positive, and FINDIA holding is increasing quarter on quarter. It has been doing well, unlike other companies, and only 8% free float is there, which is also a positive. Why I believe it has a big moat? Because it has strong clients in many domains. They are into televisions, they are into mobile phones, they are into washing machines, even kits, etc., and many other consumer durable products they do make of different companies. There's heavy institutional HNI holding, which keeps the stock relatively high, and it does not make it fall vertically, although it has declined by around 40-45%, but it has not gone down 70-80%, even with bad numbers that came in say 2-3 quarters back. Consumer durable and electronic business is in early stages here in India. So if somebody wants to buy from a 5-8 year, 7 to 8 year perspective, even then the stock looks very good, because this space altogether will grow, and so the business of Dixon will end up growing, because electrification will also catapult the business. Rural electrification that is taking place with this government, that is going to help these kind of companies generate more sales, and still trading at under 2 times sales. You have to understand that they're going to come out with I think closer to somewhere closer to 12,000 crores of sales, and the stock is around 22,000 crores. It's not very expensive based on price to sales basis, and I think it can easily trade between 3 to 3.5 times sales, which takes us to closer to 40,000 crore market cap. Big play on higher middle class consumption, but they have to increase margins and profitability on the bottom line going forward as well. So why I buy even after the surge and even after going up say 5-6x is because prospects of gaining large clients in mobile and TV space is big. So I think they could get into the space and build manufacturing facilities and manufacture products for Samsung, etc. In the mobile domain also, there are other companies, leading companies, that could be tapped going forward. A set-top business alone is going to bring in 1,000 crores. So from FY23 onwards, I think it's going to be big. It has brought in 500-600 crores last time around, may just bring in 900 to 1,000 crores this year, and that is a new business that they have started just last financial year, expanding capacities in mobile and TV space by more than 60% over the last couple of years. That only tells you as to how much the business is going to expand. Yes, the company has not produced the margins. I've kept saying that, but I think margins are only going to improve as demand surges going forward. Entering the diagnostic kits business, which is a high margin business, if you look at it, but that's a very minuscule business at this point of time. But PLI scheme is a direct beneficiary of a PLI scheme, and they are getting into it. Benefits of that will contour through over the next couple of years. Ban on import of LED televisions is also a huge positive, and that should catapult the LED sales numbers going forward. So all these factors, along with the fact that it has corrected reasonably from the top, makes it a very interesting buy at these levels or on declines. Q1 numbers has been very strong, and the best of the quarters are still to come. October to March are the best, is the best time for the company, and probably this festive season they are going to sell big time as well. So I think over the next 1 month or so, 1.5 months, you will see that the stock may end up correcting or being say in a consolidation move, but then one can definitely accumulate in this period. So I believe looking to substantially increase export of less than $200 phone will also increase the base, although demand is less for that. But this is how they're going to begin through exports, and we all know that how exports would increase the base for such companies. Ramp up in export of LED lights is also gaining more clients in that space globally, is also a huge positive. And after expansion, looking to serve 35% of all TV requirements of India, which is a big thing. That means they're going to have 1 out of 3 televisions that would be from Dixon. That is a big thing going forward. So even if you don't want to probably buy from 1.5 year perspective, but over a 6 to 8 year perspective, the stock looks extremely good uh, in terms of gaining more market share and producing very good numbers. As I said, festive season is going to be big. It should see pent up demand and strong numbers going forward. It is the largest player in making feature phones at the moment, and valuations are very attractive. As sales may surge to nearly 15,000 crores next year, and the market cap is right now 22,000 crores. So by FY24, it would be on the current market cap basis, it is trading at 1.5 times sales. In terms of technicals, it is relatively under-owned stock, especially by retail investors, and short-term support is around 3600, but I would wait for 3300 levels to buy. Major breakout is expected above 4100, so either buy above 4100 or wait for 3200 or so. In that region, one can definitely accumulate the stock. So in my opinion, buy on current market price and major declines, and keep track of numbers. If you have a 5 year view, this will do extremely well. Even from a 2 year perspective, with 15,000 crores of sales, I see the stock being around 40,000 crores or so. It should give consistent returns over a 5 year period, and in about 3 years time, 2 to 3 years time, this should double. So this was a video on Dixon Tech. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.